Hello and welcome to followers of the Kaspa journey. Today we're going to be talking about Kaspa and why I believe the release of Kaspa is the most important event in cryptocurrency history since the invention of Bitcoin in 2009. So before we get into it today, guys, don't forget to like and subscribe as it really helps out the channel. So for those of you who don't know what Kaspa is a proof of work cryptocurrency which advertises itself as being the fastest, open source, decentralized, and fully scalable layer 1. So to compare Kaspa to Bitcoin, purely on block speed times, Bitcoin produces one block every 10 minutes, and it uses something called a blockchain to do this. Kaspa, at the minute, produces one block per second, and it does this using not a blockchain but a block DAG, which is a directed acrylic graph. So at our current speed, at 1 block per second, we are 600 times faster than Bitcoin. There's currently a testnet which is operating at 10 blocks per second, and at 10 blocks per second, that's 6,000 times faster than Bitcoin. And eventually the plan is to scale this up to 100 blocks per second. At 100 blocks per second, that would be 60,000 times faster, or more transaction volume able to deal with. So, you know, it's not just a little bump from Bitcoin. It's a pretty monumental increase. And the thing is that it does this while being fully decentralized. If you're relatively new to crypto, there's something called the Blockchain Trilemma, and before Kaspa, there's been no cryptocurrency which has been able to have all three of these properties, so fully decentralized, fully scalable, and fully secure. Bitcoin came along and it was fully decentralized and fully secure, but it's not scalable. If everyone were to use the Bitcoin blockchain, then transaction times would be, you know, in the hours rather than seconds, and you'd be paying quite a bit per transaction. We're talking sort of $20 to $50 per transaction. So as a store of value and as a sort of digital property, which you rarely touch and rarely use for transactions, it's good and it works. But for a truly decentralized digital cash, which you're using for multiple transactions per day, it's just not feasible to use it. And so because of this trilemma, these different projects came along. Ethereum really was the first big one. Cardano, Solana, if you're in cryptocurrency, these are names that you'll recognize. The problem is that while they increase the scalability, and often while maintaining security, they do that by compromising on decentralization. So Bitcoin uses something called a proof of work consensus mechanism. In order to speed up or to make it more scalable, these other blockchains have gone from proof of work to proof of stake or similar. Now, proof of stake is essentially a governance solution, whereas proof of work is you're only able to obtain the asset by doing physical work, either by putting electricity into mining power and physical watts into the power, or by going to work, making a business, actually increasing your productivity and increasing your energy and increasing your work in the world, and then converting that into Bitcoin. Proof of stake, it's more of a governance solution, so you don't need actual physical watts or power in order to obtain it. If you are able to hold a large amount of the asset, so with Ethereum, if you're a large holder of Ethereum, then you can put this Ethereum into stake and solve transactions via that way. Now, governance solutions throughout history have always eventually broken down, and laws come and go, whereas physical power and that sort of perpetual power struggle that is constant throughout history. Another thing that makes proof of stake a questionable consensus mechanism in terms of decentralization is something called Pareto's principle. So Pareto's principle it's called the 80-20 rule, but essentially what it is that wealth generally over time accumulates into a smaller and smaller number of people who hold that wealth. And so what this means is that if say Ethereum did become the money, over time there would be a larger and larger amount of Ethereum being collected and being hoarded by a smaller and smaller number of people. And because the number of Ethereum you own gives you power and gives you access to the ledger and access to the rules of the ledger, eventually proof of stake systems will break down. And so that's why I believe proof of work really is the only viable solution to a truly decentralized payment system or money. And so before Kaspa, Bitcoin really was the only viable solution. But now that Kaspa has come along, it's changed the game, really, because it has achieved full scalability while maintaining that decentralization that Bitcoin did so well in the first place, and without compromising on it like these other projects have. So we're going to have a quick look at what Kaspa actually looks like. So bearing in mind Bitcoin produces 1 block per 10 minutes. This is the main net of Kaspa. So this is producing 1 block per second. And it shows you how it does it, not via a blockchain, but by a directed acrylic graph, which essentially just means it's not a linear process. You sort of have these branches. So this is the main net. This is what Kaspa's currently running on. There's testnet 11, which is running, and this one is running at 10 blocks per second, which, as you can see, is considerably faster. Now, testnet 11 is planned to be implemented in the not too far future. We don't know exactly when, but it's likely going to be at some point in 2024. And then beyond that, the plan is to scale to 32 and then 100 blocks per second eventually. So that was kind of a deep dive into the fundamentals of Kaspa. Now we're going to have a look at some of the technicals. We're going to compare Kaspa to the early charts of other cryptocurrencies. And in my belief, you are not really able to compare Kaspa, and I'll show you why. So, for example, Ethereum, get the chart up, and we'll put it on a weekly time frame to see a bit better. So let's compare the early cycle Ethereum to early cycle Kaspa. With Kaspa, you can see it has these pumps and then these long accumulation periods. Ethereum had essentially parabolic action all the way throughout its first cycle. So when you look at the first move that Ethereum had, it was from 60 cents to around $14. So that's a 2,000% move. And then it consolidated for a while. It went sideways and, had a fairly healthy dip actually from 14 down to $6. And then it took off again. And if we just take this pump here, it went from $6 to $350. And so you can see that this move here was 2,200%. And this move here was, 5,800, close to 6,000%. So there was no diminishing returns within the first cycle of Ethereum. It was continuing to put in higher and higher returns. If you'd actually bought here, you would just as well off as someone who'd bought here and sold here, if not better off, because you bought here and made close to 6,000%, whereas people holding from here and selling here only made sort of 2,300%. And this story is very similar in a lot of these other cryptocurrencies. So, for example, Solana, in its first cycle, it had this move here, which was an 800% move, and then a long consolidation and down move, and then it had another pump, and this one was 4,000%. So there wasn't really any inkling of diminishing returns within Solana's first cycle, and the same with Cardano. It's not as clean of a chart. If we go down onto the daily, and we can see it a bit better, it just essentially went straight up. And remember, guys, this is on a logarithmic chart, so this would look even more nuts on a linear chart. So the first move was 400%, and then it was another 400%, and then the last one was sort of 200%. Now, this is very, very different to the behavior of Kaspa. So when we look at the Kaspa chart, Kaspa's first move here was a 2,200% move in the space of 2 to 3 weeks, which is a pretty huge move. And then if we consider this to be the next real move, because this was the next really significant price discovery, this went from half of a cent to around about 4 cents. This year was an 800% move. And then if we take this next one, this one here, to the top of here, this was a 360% move. And now you're probably wondering why I'm taking these and sort of ignoring these pumps here, and I will get into that a little bit further on in the video. But basically, what we can see from here is that Kaspa is experiencing diminishing returns within its first cycle. So on a logarithmic chart, it doesn't look linear like a lot of these other ones did. XRP is a good example of this. If we go on this one, in XRP's first cycle, it just went straight up. There was no, there was a consolidation here, but it was just essentially a straight line on a logarithmic chart, which implies that it's exponential logarithmic growth. Whereas, when you're looking at Kaspa, you're having this quite clear diminishing returns. With each pump that comes, generally the pump is less and less. And so if we kind of follow this out, this one's 2,800, 300, we can say this is probably going to be, say, a 250% return or something, indicating that the next cycle that we see, or the next pump that we get from Kaspa, is going to be sort of within that 40 to 50 cent range. That's what the chart implies. That's not a price prediction. That's just sort of trying to extrapolate and figure out what's happened in the past and extrapolate that to the future. And so this kind of raises a question: why does the Kaspa chart look so different to any of these other altcoins? In my opinion, the only chart that you can really compare Kaspa to is actually to the Bitcoin chart. So if we get this here and we put it on the weekly time frame, in my opinion, these charts are remarkably similar in terms of you have these pumps up and then a long sort of accumulation phase and then another pump up and a long accumulation phase, but each pump is less and less, indicating diminishing returns. Now there is a reason for this. The reason is because Kaspa is the only other cryptocurrency out of around 13,000 other cryptocurrencies that follows something called a power law. Now, if you don't know what a power law is, this pattern was discovered by Giovanni in around 2015, 2016. Essentially, what it means is that when you take a graph of price and time and you log both of the scales, so log on the price scale 1, 10, 100, 1,000, and you also log the time scale, and what that means is that the zero value is the date of the Genesis block, and then the log really is the number of days since that, so the number of days would go 10, 100, 1,000, 10,000. You get a graph that looks like this. And it's very interesting because Bitcoin actually appears to be following a linear pattern on this power law chart. And so it's also been discovered at the minute, Kaspa looks like it is following a similar power law price adoption curve. Now, obviously, this is very early days. This is only sort of 2.5 years of price versus Bitcoin's 15, 16 years of price. But at the minute, it is following a power law. And can it be a coincidence that Kaspa is proposed to solve the trilemma? And in my opinion, it does. And it is the only other cryptocurrency out of 13,000 others that follows a power law, follows this sort of diminishing returns, but at the same time exponential relationship. I don't think that's a coincidence at all. And so this is what it would look like on a linear time frame. So the price scale is still logged. So this is $1 here. This is 10 cents. This is 1 cent. This year is $10 and $100. And so as you can see, over time, it gives diminishing returns, taking longer and longer to put in that next 10x. So from there to there, that's your 10x, and then from there to there, that's your 10x. So I want to do a little thought experiment with you guys. So we've seen now the Bitcoin power law chart, and so we know Bitcoin has this power law relationship, and we also know that Bitcoin follows this fairly predictable, at this point, 4-year cycle. This cycle is, at least in a large part, in my opinion, caused by the 4-year halving. And so it's kind of following this adoption curve of a fair value, but then due to these huge supply shocks, every 4 years, price goes absolutely parabolic and then comes down to this area of despair and fear before taking off again to this area of complete euphoria. But overall, this power law fair value, this green line, always sort of acts as a magnet, and price will at least has so far always been attracted back to this value. Now, what would this chart look like if instead of a 4-year halving, if Bitcoin had a 2-year quartering? So what that means is the emission schedule is still the same rate, but it's just a more regular emission schedule. So every 2 years, the miner's reward reduction gets cut by 25%. In my opinion, the Bitcoin chart would look a little bit like this, and apologies for the crude drawing, guys. This is just my my interpretation, what I think we would see, essentially the same level of adoption and the same rate of adoption following the same power law fair value. But instead, what we would see, instead of 4-year cycles, we would have 2-year cycles caused by a 2-year 25% supply shock. But these cycles would not be as big. So the sort of deviation from the power law fair value would not be as big as it is with the 4-year cycle, because it wouldn't be as big of a supply shock. And so when you get that huge supply shock, first of all, it's the mismatch between supply and demand that causes the price to rise, and then price rising causes more demand to come in, and then it's sort of a positive feedback loop until price just gets to these catastrophic levels where it can't be maintained by the buying action anymore, and the selling action pushes price lower. And so if you didn't have supply shocks which were as large as 50%, instead they were 25%, then more than likely price would never get as extended from the fair value as it does now. And probably to the downside as well. It would probably not come quite all the way to this red line. It would sort of oscillate around this with higher frequency and lower peaks and higher troughs. And so if we just extend this logic out a little bit, if instead of a 4-year halving and instead of a 2-year quartering, every single year the Bitcoin supply dropped by 12.5%, it would probably look a little bit more like this, where you have even more frequent pumps and dips, but again, they're nowhere near as large because the supply shock is not as big. So that, in my opinion, is what we would see if Bitcoin had a slightly different emission schedule. And when you really think about it, the Bitcoin emission schedule, it was kind of an arbitrary decision. We don't actually know why Satoshi chose a 4-year halving schedule, but in reality, he could have chosen anything. It could have been quite different if he hadn't picked that value and that emission schedule. And so this is what the Bitcoin chart looks like, and I've kind of tried to overlay what I think it would look like if, let's say, if Bitcoin had a monthly reward reduction of around 1%. It would probably look a little bit more like this, whereby it's still following the same trajectory and the same growth rate. It's just you never have these huge catastrophic rises and these huge catastrophic dips. And that, in my opinion, is what we see in this chart here. I believe that Kaspa is essentially following its own power law, but instead of having a 4-year cycle, it experiences these sort of 8 to 4 month cycles. And the reason I say 8 month, there's kind of a very predictable pattern in Kaspa at this point, whereby every 4 months there's a peak, but the second peak is always slightly smaller than the first peak is. So when you take the difference of the first peak to the second peak, it was around 100%, so this one put in 100% higher gain than this one is. So it's not really true price discovery, at least in terms of cryptocurrency. It's not a sort of new paradigm price, complete overhaul of the price. It's a lot, but it's not huge. And so if we go on this next one, from this peak to this peak, the price put in a 30% new all-time high. And on this one, I believe it was even less. From here to here, yeah, it was only 23. So you can kind of argue that one full cycle is an 8-month cycle rather than a 4-month cycle. So from the bottom of the large cycle, or the large pump, to the bottom of the large pump, so from here to sort of here, if we consider this the mini cycle peak and this the large cycle peak. Now this theory isn't my own. I've got to credit Siem. He came up with this basically large versus mini cycle fractal. So credit to him for this. But this kind of begs the question, if Kaspa is following its own power law, which it appears to be at the minute, and until we see evidence that it's not, we kind of have to assume it is. If it is following its own power law, and it has its own unique emission schedule compared to Bitcoin, is Kaspa even going to follow the Bitcoin 4-year cycle like we're so used to now, like Ethereum has done in the past, and like Solana has done in the past? It kind of makes sense when you think about it, because if Ethereum and Solana, all of these proposed ultrasound monies really are ultrasound money, then why do they need to ride Bitcoin's coattails, and why do they trade with a 4-year cycle? Because Ethereum doesn't have, a 4-year halving. So if it is the adoption of an ultrasound money we're seeing with Ethereum, then why does it have these 4-year pumps? I believe it just because it's essentially following the coattails of Bitcoin, and it's not actually experiencing its own adoption curve. It's experiencing Bitcoin's, and it's just sort of eating away at that and trying to solve the scalability issue. But if Kaspa has truly solved the trilemma, which I believe it has, and it is ultrasound money, then are we even going to follow the 4-year cycle? We are already seeing clear signs of a unique cycle in Kaspa, of an 8-month cycle. And bearing in mind, Kaspa went absolutely parabolic during the Bitcoin bear market. If we just overlay it here, if we go on regular instead, and if we actually get up Kaspa and say times it by 1000 to make it a little bit more clear, okay, maybe a little bit more than 1000, times it by 10,000. See if 100,000 does the trick. There we go. Yeah. So we can see that while Bitcoin was in its bear market and putting in lows, Kaspa was putting in all-time highs. And while it does obviously follow the price action of Bitcoin to an extent, it is one of the most removed cryptocurrencies, or in my opinion, the most removed cryptocurrency. In fact, one of the main complaints that people who've bought Kaspa have had over the past month or so is that we haven't really experienced any benefits from Bitcoin putting in this parabolic rally, whereas other cryptocurrencies have. Solana's done very well, Ethereum's done very well, whereas we've just been moving down during this entire thing. And a lot of people would say that's a bad thing. I actually think that's a very good thing. I think that's very exciting, because that implies that if, while Bitcoin is dumping, Kaspa's putting in all-time highs and absolutely pumping, and while Bitcoin is pumping, Kaspa is lagging and not doing very well at all, well, that kind of implies that Kaspa doesn't follow Bitcoin at all. Kaspa's sort of following its own cycle, and it's following its own adoption curve. And so that is why I believe that Kaspa is probably going to set all-time highs while Bitcoin is in its bear market. So I believe that Kaspa will set new all-time highs in sort of early to mid 2027, when Bitcoin's in its accumulation phase still. Now, I'm not suggesting that Kaspa's not going to be wrecked and not going to experience a bear market. Of course it will. Everything does. I'm just suggesting that out of all of the cryptocurrencies, Kaspa will be the least affected by this, due to this power law relationship and due to it following its own cycles. So that's the bet that I'm going to be taking. The bear market is not going to be as bad for Kaspa, but then also the bull market is not going to be, what many people hope it's going to be. I think a lot of people are hoping for a huge parabolic blow off top in Kaspa, whereby we reach sort of $10 by late 2025, and I don't think that's realistic, and it's actually not what I want to see at all. I want to see us continue to put in diminishing returns, which, by the way, I know I say diminishing returns because of the earliness of Kaspa's power law. It's still putting in ridiculous returns. It's about 400% per year at the minute, dropping to 250% next year. So, it's not bad returns at all by cryptocurrency standards, but in terms of parabolic blow off tops and everyone wanting to cash in from the bull run, I think a lot of people are going to be surprised and taken aback, and a little bit disappointed in Kaspa because they don't realize that it's not following, or in my opinion, it's not following the Bitcoin cycle. It's following its own cycle. If we take this back to just normal Kaspa, for us to really see a huge blow off top, we would have to have now a parabolic move. Maybe not now, but sort of in 2025, and we would have to have accelerating price action. So whereby, before it's been diminishing returns in terms of like this. So I believe it's going to sort of continue to follow something like this. What a lot of people want to see is now accelerating price action instead, which I don't believe we will see, and I don't believe it would be healthy for the long-term growth of Kaspa. So yeah, that's pretty much everything I wanted to talk about today, guys. Don't forget to follow me on all of the socials, so like and subscribe on YouTube, and follow me on Twitter at MikoGeno, otherwise under the handle PlanK. And if anyone is interested, there's also a Patreon whereby you can get access to a private Discord and these private indicators. So I'll just go over the indicators a little bit now. So there's a Kaspa rainbow chart, which sort of indicates areas of high risk and low risk. So at these higher bands, generally you're either wanting to sell if you're an active trader, or just stop buying if you're more of a holder. And when we come to these lower bands, which by the way we're at now, that generally indicates it's a very good time to buy, to DC into the market. And there's also a power law, where is it? Here, the power law bands. So the yellow indicates the power law fair value, and the upper and lower bounds indicate essentially, again, areas of high risk and areas where it's a good time to get into the market. So if anyone's interested in that, don't don't forget to check out the Patreon. But otherwise, I'll see you guys next time. Cheers.